Great. We're going to get started. All panelists have joined the call and the webinar, so we're going to get started. So firstly, good afternoon to all that have joined, and thank you for joining. My name is Kfir Ruzen. I'm the Managing Director of EAPI Events. I'd like to welcome you all to our first in a series of webinars in which we'll be discussing the impact of COVID-19 on the African real estate sector. As a leading platform for sharing ideas, driving conversations and connecting stakeholders, we believe that we need to continue working together by sharing data, insights and expertise, and ultimately helping the sector emerge stronger and more stable from this COVID-19 pandemic. This afternoon, we are pleased to welcome more than 500 registered attendees from across Africa and internationally. This showcases the need and the demand for such a discussion and webinar. I would like to take this opportunity now to welcome our panelists for today, who will be discussing the impact of COVID-19 on the East African real estate market. We have Ben Woodhams of Knight Frank Kenya, who's today's moderator, and will also be setting the scene with a couple of slides to start us off. We've also got Gerard Zilli from Nedbank CIB, Jess Cleland from Broll Property Group, Dhruv Pandit from Feder Group, and James McLean of Fusion Capital. We thank you all for your time and for helping us to answer and provide insights into how the sector will navigate this challenging period. From a housekeeping perspective, please note that we encourage you to ask questions. There's a chat function enabled for all the audience, so please feel free to send in your questions and we'll try and answer as many of them as we can. Additionally, we'll be also running live polls, which also help us to gather better insights and information, which will be distributed to the attendees as well. I would like to now hand over to Ben Woodhams, the Managing Director of Knight Frank, who will start off with a couple of slides and then move into the panel discussion.
Thank you very much, Kfir. I hope you can all hear me okay. So my name is Ben Woodhams. I'm the Managing Director of Knight Frank, and I've been working for, Knight Frank in Kenya. I've been working for Knight Frank in East Africa for over 20 years now. Apologies for the branding behind me. My marketing team insisted on it. I hope it's not too much. Now, to get going, what I'm going to do before we include our panelists on this discussion is to set the scene what's happening with the coronavirus around the world, and then bringing the focus into Africa, then into East Africa, which is what this webinar is all about, and finally having a quick peek at Kenya, because it's my home country, but also the center of the East African hub. So if we begin, this is an image of the Jomo Kenyatta International Airport in Kenya being sterilized. It's a landing page, and we'll come back to that image later. The global scene. Okay, so as you can see from this image, you've got dots of corresponding size depending on how many infections there are around the world. And then on the left-hand side, you've got cumulative reported cases. So as you can see, this really is a global pandemic. It's everywhere. Obviously, these dots are country by country. So North America is a bit misleading, the United States of America, because there's one dot, but of course it's all over the States. First case was November the 17th last year in China. Because it is genuinely a pandemic, nobody is unaffected, and it's profoundly affecting all the economies globally right around the world. We don't know the depth and duration of that shock, but it's certainly fundamental and will probably tip the world into a global recession if it hasn't done so already. The other thing to remember is the world's dependence on China for goods and services, and that supply chain has been severely disrupted, probably permanently. So looking at growth in China, projected to decline 2.3% in the lower case scenario for 2020 from 6.1% in 2019. So obviously China is going to be experiencing a major global slowdown, but of course, so are the rest of us as well. Global infections over time. We've all seen this graph and other graphs besides, which show us the exponential rate of growth that's happening globally. This exponential rate is being experienced by, thank you for that, most countries, although some have managed to slow that exponential rate. I'm not going to go in great details about how different countries have dealt with slowing the growth rate and flattening the curve, all of these terms that we're learning about now. But just a quick snapshot as to the nature of the growth. That is global, but a lot of countries are experiencing that rate of exponential growth. And I think in particular, the charts that you're seeing are what happens after the 100th case is reported. And that seems to be the point at which it starts to grow exponentially. So let's focus a little bit closer on Africa. This slide is shamelessly stolen from McKinsey's latest research report. Many thanks to them. There'll be a lot more information in that report from them. It's an excellent report. And what it shows us is the difference in cases. I'm not sure if you can read this because the slides, the text comes up quite small on this, but you're talking about community transmission. The red ones, those are the ones that you've got to worry about. That's where your imported cases come into the country, and then they start spreading within the community, within that country itself. And so you can see some major areas of growth in South Africa and across North Africa as well, also in West Africa and in Kenya in particular in East Africa, but we'll come back to that shortly. So African cases estimated to jump to 6,000 cases by the 1st of April. First case in Africa was the 14th of February in Egypt, and highest cases in Africa are South Africa at 1326, Egypt at 656, and Algeria at 582. So there you've got some serious community transmission in those three countries there. So the global pandemic and the oil price shock, massive fall in oil prices are likely to tip Africa into an economic contraction in 2020. And obviously, in the absence of major fiscal stimulus, that is going to have a major impact. Africa's GDP growth, as I've set up there, in 2020 could be cut by 3 to 8 percentage points. So once you take population growth into that, you're probably looking at negative figures. Right, next slide. Looking at East Africa specifically now. So in East Africa, 229 confirmed cases, 4 deaths, 6 recoveries. Now, one of the challenges here, and I'm sure a lot of you out there know a lot more about this than I do, so please apologize. This is really from a layman's perspective, but you'll notice from this graph that it was in size order, and that's got slightly confused because Kenya's cases jumped from 50 something to 81, and so we have now become, according to the data that is available, the country in East Africa with the highest rate of infections. But I think this is a point that we'll probably come back to again later on in this webinar, is that the only data we have is what governments are reporting. So at one point, Burundi had no cases whatsoever, and when they were asked why that was, the Minister of Health for Burundi said because they didn't have the capacity to test for coronavirus in Burundi. So clearly that's changed. But I do think that the statistics that we're getting from these countries varies tremendously depending on how much testing they're doing. And of course, that varies the ratio between the deaths and the reported cases, because if you're doing a lot more tests, then your ratio will be much lower. If you're only testing people that are going to hospital and being very ill, then your ratio of deaths to testing would of course be much higher. So we're not comparing apples with apples at all when we look at a country by country comparison. And I do suspect that the data we're getting out of particularly the African countries isn't particularly reliable, but it's what we have. And obviously those countries are doing the best they can to deal with this pandemic, and obviously, we appreciate that. So looking at Africa very quickly, as I said, first case in Africa was in Egypt in February. First case in Kenya was March the 13th. So from March the 13th, one case, we've gone up to 81 cases now. First case in Rwanda on the same day. In Tanzania was 2 days later, and in Uganda, the first case was in March the 20th. So moving forwards to the next slide. Now, this is the government responses for the various countries in East Africa. And you can see that different countries have got different responses. We've tried to put this into a matrix to make it easy to follow and to understand. This is in-house Knight Frank data. So obviously we're a real estate company, so we're just collecting this stuff from the media. But lockdowns, we only have them in Rwanda and Uganda so far. Lockdowns in Africa I'll come back to, but they're incredibly painful for African economies. And so countries are really reluctant to go to that weapon in their armory, as it were. Curfews, as you can see, Rwanda, Kenya, Uganda, Sudan have implemented curfews. Quarantine is right across the board. That is to say, if you're coming into the country from a country that has reported cases, which is pretty much everywhere now, then you will go into quarantine or self-isolation for 14 days. Restriction of gatherings is everywhere but Burundi. Restriction of movement is everywhere. Closing of educational institutions is everywhere but Burundi. Fiscal policy measures and monetary measures were only really seen in Rwanda and Kenya, and I'll talk about that later. But I think it's important to remember that, okay, going back to lockdown, one size fits all approach doesn't really work in Africa, and certainly the solutions that work for modern European companies with well-developed health sectors and so on and so forth. Africa is obviously very different set of problems. There's not much economic support for the informal sector. Supply chain disruptions are extremely painful. Lockdowns and restrictions on movement mean that people start to go hungry almost immediately, and that there is potential for catastrophic results there if that's sustained for a long time. So some of these countries are trying to hold back on doing that until they really need to. There's very few medical facilities. Most of you on this webinar will be based in Africa anyway, so you'll know all this. Apologies to you, but I think it's probably worth stating, even if it is obvious, just for the purpose of setting the scene here. Obviously, also relatively high prevalence of HIV and tuberculosis. So even though the population generally is young, average age of in Africa is 18. I think that's Africa. It could be Kenya. I'm sure there are some people out there that can contradict me if I got that wrong, but Italy 45. So you can see there's a substantial difference in average age. So far what we know is that this virus certainly affects the elderly more than it does the youth. And so perhaps that is an advantage for Africa. Warmer climate, lots of fresh air, although South Africa, I do appreciate, is going into winter, but generally speaking, if the environment, a warmer environment, is more favorable, then that's obviously something in Africa's favor. So there's some pros and cons there of the virus coming into Africa and the various government responses. If I can go into a little bit more detail in what's happening in Kenya, then I think we can understand, how things might be done elsewhere. Kenya is slightly ahead of the curve in East Africa anyway, but certainly not in Africa as a whole, as we've seen from previous slides. So the government directives in Kenya are the closing of all schools, places of worship, suspension of international flights. So nobody's been allowed to enter Kenya from the 26th of March, prohibiting unnecessary travel within Kenya to try and limit the spread of disease, closing of restaurants, only allowing takeaways, encouraging unnecessary movements, discouraging unnecessary movements, and proper hygiene, social distancing, curfews between 7 p.m. and 5 a.m. Everybody has to be in home, with the exceptions of essential services, banning of gatherings such as weddings, funerals. But we haven't got a total lockdown in Kenya yet, as we've seen in Rwanda and Uganda. As I say, I think they're holding back on that as long as they can for the reasons I've mentioned. Fiscal measures in Kenya. This is something that we haven't seen talked about in many countries in Africa as a whole, to be fair, but also in East Africa, only really Rwanda has talked about this. 100% tax relief for those earning less than 24,000 shillings, which is $240. PAYE has been reduced to a maximum of 25% from 30 for all citizens earning more than 24,000 shillings. Reduction in corporation tax from 30 to 25%. Reduction in turnover tax from 3 to 1% for SMEs, temporary suspension of listing of the CRB for individuals defaulting on loans, reduction of VAT from 16 to 14%. These are all with effect from the 1st of April. So in other words, yesterday, the president himself and his deputy are taking 80% salary cuts, which I think is probably, good, paying lip service to people's general perception of the government's attitude to what's going on. And the Cabinet Secretary for Tourism has set aside 500 million shillings for the post-corona recovery strategy. So in other words, to try and attract tourists back into Kenya once this is all over, tourism being, of course, one of our biggest foreign exchange earners. So if I can move on to the next slide, business practices and continuity. Now, this is interesting. I think we're going to talk quite a lot about this in the webinar today, because we are seeing huge differences in how businesses are working and coping with what's going on. So a general increase in hygienic practices and social distancing. Obviously, that is things like hand sanitizers and so on and so forth. Changing work practices, working from home, improved use of technology, and of course businesses really looking at their cash flows to see where there are areas of saving expenditure as they try and cope with massive reductions in turnover. Now, we've seen some comedy moments. I'm sure all of you have seen people making mistakes whilst trying to get used to using video conferencing, for example. The woman who turned herself into a potato head on Microsoft Teams and had to conduct the whole meeting as a potato head because she couldn't work out how to reverse that setting. Or I'm sure you've also seen the naked man in the Zoom meeting who didn't realize that his webcam was on for the entire meeting, and everyone else in the meeting was shouting at him to turn it off. So we're all learning a new way of working, but joking aside, being serious for a minute, I think that the lessons that we learned from this pandemic are likely to have profound effects on the way we work into the future, and also the way we occupy property as well. I think that that, as I say, will come up further as we explore these topics. I, for instance, had this morning a Zoom meeting with 100 of my staff phoning in on their phones, on their laptops at home. Some of them were on the bus, some of them were in the office, and you're able with Zoom, other conference facilities are available. You are able to conduct quite sensible meetings with people speaking in turn, and it works really well. And as I say, you've got to start asking yourself, do I really need to spend all this time in traffic or on airplanes when, I'm learning, albeit the hard way, how easy it is to actually conduct businesses using these methods that are not new methods. They've been around for a long time, but we haven't really been trained how to use them. And now we are using them out of necessity and realizing that actually they are perhaps the future. So that was a very quick scene set. I hope it's put everybody into the frame of mind to discuss about what we want to talk about today. So if I could ask my panelists to turn on their microphones and their videos, I will start passing on some questions that I have that have been provided by the organizers. I also have some questions for the panelists specifically, and I hope you all saw that disclaimer. It flashed past very quickly. EAPI protects themselves from anything controversial that we might say in this discussion. So what I have is a number of questions here that I would like to address to the panel generally, and I think perhaps we can feel our way through, who would like to answer these and work our way through them. So the first question I have is, all businesses are currently restructuring to adjust to the new normal. What strategies are your business implementing to ensure that you survive the effects of the pandemic? And I think, speaking from a personal perspective, the first thing we did was we worked out who had to be in the office and who could work from home. And then we worked out how we could get people safely into the office and how we could utilize new IT to get people working from home who were able to do so. So if I could throw that question to the panel, and perhaps I can ask James if you want to answer that question first. James McLean, Director of Real Estate from Fusion Capital. I'm asking you just because you're the first on the list under me, and we'll work our way through and see where we go. So over to you, James.
Yeah, great, and thanks, and hi everyone. Yeah, I think, obviously even though we'd heard of cases and we knew that there was the virus going round, I think everyone took a while to really realize that it was going to very quickly get to obviously East Africa and then very quickly impact us. I think the first thing we did, I mean, first of all, was just keeping our workforce and everyone in our subsidiaries safe. So we quite fortunately we had a policy in place about a week and a half to 2 weeks before the first case in Kenya, which gave us time to go completely remote, basically on the first day that there was a case in Kenya. So Fusion as an organization went remote. And we'd also had those discussions with obviously our subsidiaries and our projects and the employees there. So yeah, I mean, we, exactly the same as you, we've had a crash course in Zoom, but finding it, really effective every morning, having a full team meeting, and every time being surprised at how effective and efficient it is. Yeah, and then the next step, and I think it's what everyone's done, is go and look at our costs, try and estimate how long we think this is going to impact us directly as a company, and really focus on seeing how we can put ourselves in a sustainable position, which I'll throw that to the rest of the panelists. I assume everyone has taken the same first steps.
Yeah, absolutely. Drew, what from your perspective, give us an opinion from where you're sitting.
Yeah, I mean, we run a diversified real estate portfolio, and the hospitality got slammed first from all of this. As you said, the airport got shut down, so we had to cope quite quickly because it was not immediate, but there was a phase thing, and we had to look after our guests first, actually. And a lot of it was, I think, what has been said before, but more from the customer-facing side. How do we actually keep our employees safe? Those contingency plans kicked in. We had a little bit of time to think, as has been mentioned. So that delay has certainly helped Africa from a planning perspective. And we also then had to communicate with guests, make them feel safe. And then, of course, all the other cash flow conservation measures kicked in. And then we had to look at our retail portfolio as well at that time. And, again, it's one of the things I think that's helped really, really well is a sense of proactive communication. So we're always keeping very close view on sending out measured information, because as you know, in Africa, what happens is WhatsApp tends to dominate as the media of choice, and there's a lot of controversial, to say the least, or fake news out there. So that's what we wanted to communicate through, perhaps.
Yeah, absolutely. I think that's very important. Gerhard, from your perspective, I'll repeat the question just in case you missed it. All businesses are currently restructuring to adjust to the new normal. What strategies are your business implementing to ensure that you survive the effects of the pandemic?
I think, as you know, South Africa is in a complete lockdown at the moment. So I think a key experience for me has just been the rate at which things change. And as soon as you've sorted out your plans, I think things change again and you need to adapt those plans very quickly again. So I think the biggest issue was planning around enabling people to work remotely. And then I think coming to grips with the change in culture that brought about as well, in terms of how you work every day. It was quite an experience for me. You obviously don't realize actually at the office how little time you spend in front of your laptop until you start working from home. Then you actually realize how much time you spend in front of that laptop, because at the office you do go out, you go to a meeting, or maybe you step out, and it's actually a lot different than working from home for such a long period of time. But I think people adapted to this way of working quite quickly, and different people have different rhythms. And as soon as you find that, my experience is that under the circumstances, it's working quite well.
Okay, cool. Jess Cleland, Group Managing Director, East African Indian Ocean, Broll Property Group. Like Knight Frank, you're managing property. So presumably, like Knight Frank, you need to have some people in the office. How are you coping with that, and what steps are you taking to safeguard your organization's future?
Yeah, thanks, Ben. I think we're looking at it over 3 different horizons. So first is obviously, what do we need to do now, right now, during the time of crisis? So first and foremost, it's about, as everyone else has said, it's about keeping our staff safe, keeping them healthy, making sure they have the tools that they need to be able to continue to operate. But at the same time, we also have this responsibility to our clients in the buildings that we manage. Obviously, office buildings are generally pretty quiet at the moment, but shopping centres, with the essential services that they provide, have needed a lot of attention, a lot of sort of continuity and action plans to be implemented straight away to provide the services to the communities. So that's the immediate steps. Then what do we need to do over the next month or two, however long the crisis takes? And it's looking at helping our clients, whether occupiers or landlords. And the whole question around income streams, we've been swamped with people asking, how do they start to negotiate the question of rent? And that's something I'm sure we'll talk about during the panel today. And then the third horizon is looking at the future and how do we build sort of a sustainable, structured business. So looking at, what are our income streams? What are the services that the industry and the countries are going to need going forward? As an example, I think probably within 6 months, all the banks especially are going to be looking at their portfolios, investors are going to be looking at their portfolios, valuations are going to become crucial, but we can only do that once there's some sort of stabilisation in the market. So it's kind of, what do we do now, what do we do tomorrow, and then what do we do in the long term?
Yeah, I know I'm supposed to take questions from the attendees at the end, but I'm looking at the chat and seeing these questions coming in. I mean, you mentioned rent, Jess, and obviously I'm sure at Broll, certainly at Knight Frank, we've had a stream of letters coming in with tenants asking for rent holidays, rent relief, service charge relief, and this raises a question really that landlords and tenants obviously have a relationship which goes beyond the contract of the lease. But, it seems to me that, and I'm trying to, look at this from both perspectives, but tenants just make an assumption that it's jolly nice for landlords to get rent and service charge, but, they can just turn that tap off to help the tenants out. And of course, that's not the case at all. I mean, if you were to say to all of your tenants, fine, you don't have to pay rent or service charge for the next 3 months, there probably wouldn't be, if we're talking retail, for example, a shopping centre for you to come back to. There would be no security there. There would be no, you can imagine what would happen. So, of course, this simply isn't possible. I think the general consensus seems to be that landlords and tenants must share that pain together. And to me, that would be a full service charge and a 50% reduction in rent, because the service charge is keeping the building going. It's up to the managing agents to reduce the cost of that service charge where they can. That is to say, perhaps shut down parts of the mall and so on and so forth. But in order for that mall to still be there, when this is over, that service charge must be paid in one form or another. And, the landlord has their own overheads as well. There may be finance payments for the mall or whatever. So, it's about sharing that pain rather than the tenant simply saying, do you mind if I don't pay my rent until this gets better? I mean, Jess, what are your thoughts on that?
Yeah, absolutely. When preparing for this call, I mean, that's very much the thoughts that I jotted down. I mean, if you look at the entire value chain that we're working with here, from consumers to tenants to landlords to banks to government, I think it's very unfair that one sector, one portion of that value chain, is expected to bear the full brunt of the pain. We're all in this together. It all has to be shared, and so, like you say, the expectations that landlords must bear the entire pain or the entire cost of the crisis is unfair. Similarly, it would be unfair for the banks to bear the full pain. It would be unfair and unsustainable for the tenants to do that. So So there is going to have to be some sharing of the pain, as you say. And I think the most important thing here is to just communicate. I think the worst thing that you could possibly do in this situation is to just stop paying your rent. So you need to have a sit down, a discussion, and look at your options. I mean, we hear about the whole force majeure clause getting thrown around a lot as a potential, something to stand on, which is fine. And there are some cases where it might apply. I'm certainly not, don't have a legal background, so I'm not going to state anything too definitive on that. But if you are going to look at that sort of thing, you do need to show that there are no alternatives, that you've carried out all reasonable steps, that all of your options have been looked at. And this is just something that's good practice. Do you have insurance that covers this kind of thing? If you're a larger company or a larger tenant, you've probably got a bank or shareholders. If you're a smaller sort of single trader, okay, maybe you don't have those sort of options. Are you looking at the same sort of issues with your internet service provider, your telco? It's not just your landlord who needs to put the bill for all of this. So you need to discuss your options. Then like you said, I think the absolute minimum and the non-negotiable is the service charge, because we need that to function. But when it comes to rent, there's all sorts of options. I mean, there are rental holidays that can then be extended onto the end of the lease. There can be rental reductions or discounts, partial payments with deferred payments that can be either with or without interest. You can start looking at perhaps drilling into your security deposit if agreeable to both parties. Retailers can look at switching to turnover rentals only. If the timing is right, you can look at a full re-gear of the lease. So I think the point is that there are different options, and it's going to have to be, I don't know if win-win is the right term, but minimise losses is probably going to have to be the agreement that everyone gets to.
Dhruv, what are your thoughts on that?
I think just said it all. It's hard to actually add on to that, except to say preserve the relationship, because at this point in time, we're all in it together. And if there's a good communication between tenant and landlord, it'll hold us in good stead for the years to come. Because definitely in the long run, tenant mixes will need to change depending on how the circumstances do. And an adult conversation today would help tremendously. And one thing I'd kind of like to say is one size does not fit all. So much as we'd like to go, and I know you manage a massive portfolio, and you'd like to say 50% across the board, invoicing department's happy, everybody's happy. I'm not sure that's the right way to do things. I would say it would vary from the class of tenant you have. For example, some of the supermarkets here are going to be very, very busy and continue to be very, very busy until.
Very good point. Yeah.
So a little bit of nuance and a little bit of, I would say, as between the landlord and tenant, you as managers, helping that engagement and a conversation as a three-way engagement would perhaps be much more beneficial, so that we all understand where we're coming from.
Well, that brings me nicely on to my next general question for the entire panel. We've talked a lot about retail, and of course, you're absolutely right. The next question is, which sectors do you think will be worst impacted by the pandemic in the short to mid-term, and which do you believe will be the most resilient? Will they recover from the losses made during the time of lockdown? So we've talked about retail, and paradoxically, retail is probably the hardest hit, and yet the anchor tenants, the shopping centres, have never been busier. And so, of course, as you say, one size does not fit all. A lot of the anchor tenants are on turnover rates in any case, and so that simply becomes a function of their lease, and so you could sort of sidestep that issue. But those of you who are exposed to sectors beyond retail, which other sectors do we feel are going to be more resilient, and which sectors are going to be suffering? Obviously, the hotel industry is going to be very affected by lockdowns, although they may well recover when that situation reverts. Go ahead. What are your thoughts on that?
Yeah, so I think probably the worst hit sector would be the hospitality sector, because I think the impact is felt absolutely immediately and overnight. You just have virtually no people coming
Turning off the switch
assets
instantly. Yeah.
Yes, and then of course, the operating costs of those assets are also quite high. So, how do you plan for the period that you'll have a very low or maybe no occupancy rate in that asset? And how do you plan for the costs relating to that asset? So I think hospitality is being hit very, very badly. And then we've spoken about retail a lot. I think commercial is a little bit different in that actually your risk has got very much to do with the credit risk profile of your tenants. But I've also seen that during this whole process, very few clients and tenants have immediately pulled out their sword to start a legal battle around who should pay and who not. And it's more, like Jess has said earlier on, a bit of a dance between tenants and landlords to say, what do we come up with that's reasonable and works for us? But typically in a commercial building, if you have very strong tenants, and of course, if there's no legal basis for them not to pay, you obviously are taking just a risk on that tenant's ability or willingness to pay. So I think commercial probably would be a little bit more robust, and I think the same argument probably goes for industrial.
Sure. James, what are your thoughts on that?
Yeah, I think, kind of similar. Obviously, we don't have much hospitality exposure, but yeah, hospitality is being hit very directly. Retail, yeah, again, short term, big hit. Long term, is there going to be a change in consumer habits? And one of the things we've been discussing is online shopping. People are stuck indoors and are starting to look at online shopping. Is that going to change the demand for space? We think potentially yes. Consumer habits, people are, there's a lot of talk around a change in the way people are going to spend their money. A bit more caution in definitely in economies like the UK, but also that will filter through to our economies. So retail might change, and we need to figure out how. Obviously, in the short term, it's fully impacted, but in the medium to long term, we need to figure out how that's going to change and where the demand is going to be. And yeah, I think I agree. Commercial will. We'll have to see whether. It's really impossible to say what the impact is going to be on commercial in the long run, because we have no idea how long this is going to go on, how many companies are going to be affected. We deal a lot with SMEs, and we know that they are kind of the core of definitely the Kenyan or East African market. So supporting SMEs through this time is going to be really important. But we need to think whether when we come out the other end, SMEs' working habits will have changed in the same way that we all described ours have changed over the last 2 weeks. So again, it might not impact commercial as much because it'll probably be a pivot in the way commercial space is used. But it's very likely to lead to an increase in supply, and as we all know, especially in the Kenyan market, there's already been an oversupply. So yeah, they're all going to be hit, and I think our job, as developers and investors, is to firstly assist the companies in the short term and make sure they assist all the tenants in the short term, help them survive it, and then in the longer term is to see which sectors we should focus on, which sectors are going to change and how they'll change and how we can benefit from that.
Yeah, okay, fine. Thank you very much for that. Next question. Yeah, sorry, Dhruv, go ahead.
Yeah, just to make a point on industrial and logistics that's perhaps slightly overlooked. I think it's going to be actually quite a booming sector, for at least in the short run, because if you think about it, cargo ships are going to be constrained. People are going to be ordering quite a bit more to keep stocks in the supply chain in case of many more disruptions coming forward. So whether it's warehousing in Nairobi or near the port, or whether it's some of the like the Jumias of this world having to deliver through certain containment areas, certain baskets of items or things like that. I think that there's a little bit of upside in there. How long it'll last, who knows? And then the other one is the medical facilities sector. Much as we don't like it, there will be pressure on that side. There will need more beds, and a lot of other spaces may need to be, shall we say, repurposed. And I think that's something that needs to be thought through a little more as time goes by. Not that anybody wants to profit off misery, obviously, but it's a fact. This will be needed.
Yeah, no, I think that's a very good point. We're always looking for opportunities, certainly in times where we're seeing our turnovers drop. Are there opportunities out there? And I think we can probably come back to that a bit later. But certainly, take your point that the logistics sector may actually be performing higher than it was previously, and also, of course, our anchor tenants within retail are extremely busy as well. My last question I've got here before we go on to some slightly more specific questions for specific people is, how is this affecting the leasing market? We've touched on this before, but legalistic force majeure triggers or unilateral rent holidays will only trigger lose-lose responses from both parties. How do we create win-win solutions? I think probably, Jess, I can point this one at you, but where a tenant has a force majeure clause in their lease, they can simply walk away from it. Where does that leave landlords, and how do we create win-win situations rather than lose-lose? I know you've sort of touched on this already.
Yeah, so I think it comes back to really what I said earlier, and to the point that Ruth made as well. The relationship between a landlord and a tenant is a long-term one. It's a serious one, and yes, there is a contract there that everyone needs to abide by. But we do need to get solutions that work for both sides. Just because you're allowed to do something doesn't mean that you should, and that it's the right solution. So, if from one perspective, if you're forcing your tenants to pay their full rental and no discount, no consideration, well, they're not going to last very long, and you're going to be sitting there with an empty space in your building. At the same time, if you're a tenant and you decide to just not pay any of your rentals to your landlord, well, they're not going to be able to provide the services for that building and be able to pay their own staff. These are companies that have their own operating expenses, and like I said, that goes up the value chain. They've probably got debt payments that they need to pay to the bank, and we have seen some solutions starting to come through from the banks. I think we just need a little bit more clarity on how those get shared, and how and what other mechanisms. Like I said, there's all sorts of options that you can use to negotiate your rental payments, whether it's deferring how much you pay, or deferring the timing, or changing the amount that you pay. But in the end, it has to work for both sides, because without a tenant and a landlord both still in business, it's not good for anyone.
Yeah, okay. So from a financing and investment perspective, the pandemic has already caused huge depreciation in African currencies. I think that this one of you, Gerhard, how are you managing this, and do you think these FX levels will continue in the short to medium term?
Apologies, the last 2 minutes on the call or on the webinar has been quite bad. Yeah, I think currencies will come under pressure, but I think even worse, the foreign currency liquidity will become very, very bad in the next few months. And I think probably on projects that are funded with dollars or euros, especially on the senior debt side where the repayments are very inflexible typically, that would be very, very tough for landlords and owners of properties to secure liquidity to service their debt obligations.
Sure. Okay, thanks. Yeah. Right, if I can move into, there's some quite interesting questions coming up on this chat. There's been no mention of the residential market. Whilst the demand for housing will change, what do the panelists think that the pandemic will do for the pricing of land and housing and financial institutions' lending capacity for financing projects and mortgages? Well, I think that a lot of these questions we simply won't have the answers to at this stage. But who on the panel would like to have a stab at that one? Any volunteers?
Go
on, Drew.
On residential sector, it's all about confidence, right? If there's been an impact, and we all know that it's going to be a massive impact on businesses, how secure is your job? And if your job isn't secure and you've been retained on, say, half the pay, say in the hospitality sector, some businesses have looked at how do we keep the team together and manage the staffing costs. Your ability to afford your rent payment, or in the rare case a mortgage payment, is going to be affected. So I think it's certainly going to constrain any increments, and some of the, shall we say, lower quality developments are going to struggle, because the high quality developments will be able to reduce the rent, still maintain occupancy, for want of a better word, and survive through. It also comes back to one of the other very interesting questions, whether it was to retail or residential or commercial. Are we going to see defaults? And I certainly think so. It'll be more on the quality, lower quality side of life, and maybe that's not such a bad thing for the long run, because we do know that there is a wide disparity between the quality buildings and shall we say grade C type of things that color the market.
Yeah. Okay. Thanks for that. Go ahead. Yeah.
Sorry, I just want to add something to that. I think everybody or anybody that's thinking at the moment about what are the opportunities to develop or do something, I think it's the wrong time to think about that completely, because the environment is just too uncertain. I think just to do any type of feasibility where you want to gauge what asset value is or what returns would be, also to construct it, it would be very, very difficult to understand that at the moment. And if you're in the frame of mind where you want to quickly come up with a great plan, because of the environment that we find ourselves in, your plan will probably not work out. So I think the time is to be patient, to be calculated, to deal with all the problems or that you currently have, and best sort of sort it out. I think the only sort of bit of hope that we're all hanging on to at the moment is that what we're experiencing, we all think would be relatively short-lived. And when I say short-lived, probably 6 to 12 months. And then hopefully after that we can adapt to the new environment and make things work again.
Well, that leads me seamlessly into my next question. I'm going to put this to Jess. This is from the specific questions for each panelist, but I will also throw it out to everybody as well, because I think it's my favorite topic out of this webinar. And that is, how will this change the way property is used in the future? And, we've seen how we're all having to change the way we use property right now. What lessons will we learn going forwards? And I think this is something, just before I hand over to you, please allow me to just procrastinate for a second. We were seeing these changes happen anyway. And I think with the likes of WeWorks, the disruptors coming into the market and changing the way offices are used, for example, I can't help but think that this will increase that trend. It will accelerate it. The way we're having to rethink our occupation now, with people working from home, and the discoveries we're making about how it is possible to work from home. This was happening anyway. I haven't worked in London for over 20 years, but my colleagues who work there say that on Fridays, London was appreciably quieter because people generally tend to work at home from Fridays. This was obviously before the virus. After the virus, are we going to see more of that? Are we going to see more hot desking, more people sharing from space, more people having home offices? And what will be the overall effect of the office industry in particular, but the property market as a whole as a result of that? Jess, your thoughts on that? Yeah,
absolutely. I think you've hit it spot on, and that the speed with which we've had to react to this situation means that there's really no new solutions that have been implemented just yet. I mean, they might come as people have time to get more creative, but really for now, the solutions that have been implemented are things that were sort of already happening, but they've just been forcibly accelerated. As you say, the whole work from home thing it's been a thing, but now everyone's been forced to really adopt the tools and the technology. There's always this sort of path of least resistance where, the first time you try something new, it's like, it's just easier to stick with what I know. Well, now everyone's used to it. So I think certainly we will see utilisation ratios drop in commercial buildings. I think it will change the retail sector as well. We've seen this shift to obviously online shopping, deliveries, and at the moment it's enforced, but it's also very, very convenient. So the increase in sort of things like drive-through pharmacies that have never really, been a thing anywhere in Africa. That will change the way that shopping centres and retail is used. I think the other thing that might come out of this, though, is an appreciation for social gatherings. We're all locked away. So I think the opportunity is, again, something that we've been saying for ages, is that shopping centres become a source of community. It's a place where people can gather. It's a focus on entertainment, on food and beverage. And it's not that you can't go to the supermarket. It's just that you want that social aspect. And I think certainly in the short term, once people get out of this, there's going to be a huge boom in that area.
There'll certainly be some catching up to do, I have no doubt.
I beg your pardon?
I said there'll certainly be some catching up to do in terms of socialisation.
Absolutely, yeah. But I think if we come back to the commercial side, obviously with probably reduction in workforces, unfortunately, certainly with lower office space needs, whether it's because of fewer people or fewer people employed or fewer people actually using the space, shorter term leases are going to be a lot more vulnerable. And then that obviously implicates the co-working sector, which it's been really interesting to see how that's shaped the industry and how it's going to be hit with this downturn. I think in the short term it probably will be, but in the longer term it might actually offer the best of both worlds, in that we've seen now there's this mass adoption of working remotely, which the co-working sector can provide, but also coupled with that more sort of social element as well. And then the last thing that I just want to mention that I think is going to be fascinating to see is that, especially in the commercial space, we all know, especially in Africa, the universal limiting factor on any deal is the parking. And if we don't have these limits on the parking, can you imagine the sort of creative deals that we're going to be able to structure without these restrictions? So I'm really interested to see how that develops.
I mean, talking of parking, of course, the other issue is that, while we're working from home, we're getting between 1 and 3 hours of extra working time a day that we're not sitting in our cars or other forms of transport as well, which is certainly very liberating. So I think at the very least, I would look, my own personal circumstances anyway, of dedicating at least 1 or 2 days a week from working from home, just to benefit from that extra time and that extra efficiency as well.
Could I jump in? I mean,
please, yeah.
We forgot the other forgotten real estate sector, which is of course schools and universities. Yeah. I just wonder, with my kids homeschooling, just to bring it home slightly, they're appreciating it a little bit. They certainly want the social community side of it, but you imagine how some of our roads, if we didn't all turn up at the same rush hour for schools, would change if some schools, did say a day a week. Poor moms and dads, perhaps, but we're all getting used to this blended lifestyle. The other bit I'd just like to say from a facilities management point of view, I think AC is dead. Well, at least in Africa, we have the opportunity of opening our windows. All those energy costs I see for really stuff that stirs around bacteria. Sorry, but that's exactly what it does. Perhaps the fear factor will last longer than we think. So there's some knock-on effects for FM side as well, I think.
Sure. Yeah.
Actually,
No.
I'd like to add. This is what again. I think we'll get the question asking. What about residential? So we had a very interesting conversation last week as a team around what people want from their houses. It's no longer a place. We've seen that it's no longer a place just to go and sleep. It's now people are realizing that it's a space to be utilized. If people are working from home more, they will want that additional comfort and the additional services. So, buildings which really focus on, offering additional offerings, things like gyms, spaces, places with outside spaces, which haven't really been given much of a premium in our markets up until now. We think that additional services is going to become a really big. I mean, a lot of people now will be sat there thinking, "Oh, I wish I had a garden in my block," or "I wish I had a gym in my block." So that's one area where I think we'll see a big shift in East Africa.
Yeah. No,
if I can maybe also add something of that. So I think also both owners of commercial buildings and retail buildings will need to rethink how their tenants are going to work, and especially in retail centers, tenant mix, because I buy the point that Jess made around retail centers being, especially in Africa, being a place where people go to not just to shop but for entertainment, to go somewhere to do things. And I don't think that is going to change significantly. I do think that mall owners will need to think about what those offerings are and how they link up with the traditional stores that one would find in a typical shopping center.
Retail centers traditionally have tried to make their centers as attractive as possible to try and get people to spend time in there. But I mean, they almost have a social and moral obligation to provide those facilities in certain areas as well, don't they? Where there is a lack of amenities in particular areas in Africa, the shopping centers are relied upon to provide that. Wouldn't you agree?
So I do. The other point on shopping centers is I think the penetration of online shopping in Africa is not at a level where one would see a big move from traditional retail or even sort of informal retail to online shopping. I just don't think it's there yet. I'm not saying that it can't change very quickly. It certainly did change very quickly in a lot of other countries, but I think we probably still quite a bit of time from online shopping.
There are infrastructure challenges in Africa that are probably greater than elsewhere in the world as well, but they have been overcome in other places as well, of course. So we'll see. Yeah. Okay. And then of course, as has been said already, that would lead to a massive expansion in logistics and light industrial space as well. Yeah. Anyone else want to comment on that before we move away to one of the other questions that I have here? I've got one here for you, Gerhard. It's a very simple question. What is the landlord's legal position? Now, that's a very interesting question because you've got, our recommendation is obviously if you're a tenant and you want to stop paying rent because you can't trade, we're recommending that you negotiate with your landlord and come up with some equitable solution. But, what is the landlord's legal position if he has a contract that's enforceable and a tenant that's unable to or unwilling to meet the terms of that contract?
I really hope that the time we find ourselves in now is a time where lawyers are not going to make a lot of money, because in times of turmoil, they typically do, with absolutely no winners at the end of the game, except for the lawyer.
In our attendees.
So I mean, we spoke about force majeure clauses in contracts before. There are other clauses. Typically, anchor leases have got clauses that if the occupancy rate of the mall is below a certain level, then there are discounts. Those. I foresee more discussions around that than, listen, I'm out of this mall, I'm not interested in it anymore, and good luck. Because if you are a tenant and you are in a position where your store's doing okay, you would like to come back to a mall in 6 months' time. Yeah. And continue your business. So I really hope that lawyers are going to make very little out of this whole thing, and people are going to act commercially. And I do also think there is a sense of we are all hurting. And in some way, we need to come to a solution which might not always be fair, but a solution which either party can actually just carry to make sure that we can sort of continue a business relationship in the next 6 or 9 months.
Yeah, so keep
I
it
just
out.
wanted to say also that 80% right today is better than perfect tomorrow. So let's not prolong these discussions. Everybody wants some sort of stability, predictability. So if it takes longer than a couple of meetings, it's not going to happen. It's got to be short and sharp, I think.
Yeah. And just to add to that, we're finding that transparency is really key here. As I think you mentioned at the start, some tenants do think that rent can just be turned off, but actually explaining the picture and explaining the situation with, as I think is going to be the theme of this whole webinar, of having more contact with your partners and your tenants. I think that's being transparent and letting them see what the impact is to you and what the impact is to their space in the future, I think is key, and we're finding that very useful.
Yeah, no, I think that's a very important point, and also the point that if you're a tenant, you're going to be very reluctant to simply walk away from your business in a way that will make it very difficult for you to come back to it. So if you just down tools and walk out of the centre and say to the landlord, okay, it's your problem now, he's going to be very unlikely to offer that space back to you when all this is over and you want to come back in again. So I think it's, as you say, it's quid pro quo, and much better to be in negotiation now than somebody simply pulling out or somebody's lawyer pulling out a clause of release and saying, right, we're enforcing this and this is what we're going to do and this is how we're going to behave. Because of course, as you say, landlords are suffering as well as tenants, and it also is, as you say, not a one size fits all solution. Okay, picking another question. Drew, what are the implications in the longer run for a tenant mix? In other words, what the lessons that we learn, I guess, going forwards after this, how will that affect the kinds of tenants that we want in our properties going forwards?
I think it's been touched on quite a bit before. I suppose, let me frame the question differently. What gives more of a sense of community rather than just a simple product or a simple service? We're going to think a bit more carefully about, how that happens. Also, some of the more resilient tenants, say we've seen a trend of, say, hospitals or medical clinics come into our malls. Is that going to be the new stable anchor of future? Things like, but then is there a fear factor of having that sort of thing around a commercial space? There's been some angst, for want of a better word, of having mixed-use developments now, so there's because there's so much we don't know about how behaviors will change psychologically. The doctors I'm speaking to, for example, are saying the big boom industry is actually not going to be the short-term thing. It's going to be the counseling afterwards. And how does that, it's all about human behavior at the end of the day. I like, in some ways, the example of a few years ago when there were terrorist attacks and, we all whinged about going through airports half an hour early and taking our shoes off and belts and whatever else. And then we just got used to it. Mall attacks happened and we got used to, being frisked or sniffer dogs and certain malls before we came in. But looking forward, is this an exact parallel? I'm not so sure. I mean, having your temperature taken and doing a sanitary thing, will we get used to this? Maybe, but what other behaviors will change?
I think
it's really an open-ended question. What does community mean, in fact, in this new era?
Yeah. Okay. A quick one for you, Gerhard. I think we'll probably try and go to the questions. I think we've got quite a lot of questions from the attendees. The organisers can guide me as to when they want me to start addressing those. But quick one for you. What are possible options that property owners can discuss with their financiers, equity and debt? In other words, you're your income is being slashed, your tenants aren't paying their rent, you're having a difficulty meeting your financial obligations. What are your options? What conversations should you be having with your financiers?
If I just talk about debt financiers, in other words, debt financing from banks, I think you should have a conversation with your bank. Netbank is currently having conversations with a lot of clients, not only in Africa, but also in South Africa. And the various options are available. There are the potential to only service half the interest, potential to have interest roll-up, in other words, no installments for a period of time, and also maybe even a suspension of capital payments for a period. I think the important thing to note there is obviously transactions that are currently low risk. In other words, where the gearing is low and the cash flows used to be strong. Those are easier to be flexible on than compared to transactions where gearing might be higher. But I would suggest a discussion with financiers. The general feedback that I've been getting is that banks are listening to clients and are trying to come up with solutions that would carry clients through this period.
So I think that really brings it home to all of us here that it's not just tenants who are negotiating with their landlords, it's landlords negotiating with their financiers as well. And we can see and appreciate that there is a chain of assistance that's needed right from the tenant up to the bank at the very top. And I think it's important for tenants to remember that as well, that as we said earlier, sharing the pain, we can we can appreciate how that needs to happen at all levels, not just at the level of the line shop in a shopping centre or a serviced office that's empty. Okay, so what we're going to do now is move over to the questions in the chat. I think the panelists, you can probably see these as well, can you? If I can, sorry, I'm a bit new to this. We'll start with the first one here, partly because I haven't worked out how to scroll down yet. So Adnan is saying, is COVID-19 merely an excuse for the current economic effects that we are currently experiencing? There was a downward trend prior to this, and COVID-19 accelerated the process. So, is this really just masking what was going to happen anyway? I mean, my gut reaction is obviously, no, because this is a catastrophic collapse of markets across the world, and I don't think that was going to happen anyway. Has it been is it simply? Let's put it another way. If we were in a stronger financial position globally, would the effects of COVID-19 be less? I think maybe if we look at it from that point of view, A, it's slightly less controversial, and B, it probably helps us get our head around that. Who would like to take that question?
I'll respond to that. I think it's difficult to try to determine what if things were better and now it's worse with COVID. I think we find ourselves in the typical perfect storm, and because it's not just the weak economic growth sort of pre-COVID and the impact of COVID, we're also sitting with the oil crisis. And I know Kenya is a net beneficiary of a low oil price, but it certainly has global implications, and everything is just working together to create an economically very unstable time with lots of challenges. So, everything is contributing, but I don't think one particular thing in isolation is potentially worse than the rest, although COVID is, in my view, certainly the biggest driver behind what we're experiencing at the moment.
Okay, cool. We've got another one here. Sorry, do you want to add something to that, James?
I was just gonna say that one of the things we found is we were doing a lot of planning. Yes, I don't think it's a secret that there's a bit of an economic downturn in our region. We've done a lot of planning for that over the last 12 months, which has kind of prepared us slightly better for the COVID pandemic. But the reality is they are they all have signs of it happening. So preparations can be made, and the shocks to an economic downturn are lessened by the fact that in certain, unless it's a real, like the banking crisis, you can see them coming, and you can prepare for them. Whereas none of us had, I think we can admit that none of us had this on our radar as something that could go wrong. The reason every lawyer is having a webinar on force majeure at the moment is because everyone just put that clause in, not thinking there'd really be an event that would trigger it. So I think the difference here is that there was no ability to plan for it. It's not really a cycle that we've seen before and we've had to react to before. So no, I think the effects are much stronger because it's not something we had the ability to plan for.
Great. Okay, so while you've been talking, I've worked out how to scroll up and down in the chat, which is quite exciting. There are literally hundreds of questions here, but I've picked out a juicy one here for you. After this pandemic, is property still the best investment? Now, my immediate response to that is, well, property only really makes sense as part of a diverse portfolio, and you wouldn't necessarily say it's the best or the worst. Obviously, it has its own characteristics, particularly being a buffer in other volatile markets and so on and so forth. But Drew, what do you think about, is everybody going to go off property now because we've seen that it has risks where tenants can actually stop paying rent, God forbid, and leave you with income shortages in your buildings?
Well, actually, back to your point, or back to the point made earlier about a perfect storm, just see what the stock market's done.
Well, exactly.
So if you do pull it, where would you put it? In cash, with the low interest rates coming around the corner more than we ever thought before?
Yeah.
So I would say, yes, it is on the face of it a juicy question. I think I would say is whatever helps you sleep at night is perhaps the personal question I'd ask that whoever asked the question to reflect on. Yeah.
Jess, your thoughts on that?
Yeah, exactly. I mean, everything's relative. What is a good, as Drew said, what is a good place at the moment? We often talk about, flight to quality. That's something that maybe within the real estate market we'll see, and I think somebody touched on it earlier. We've seen before in different downturns that the market sort of diverged into a two-tiered market, where the high quality assets are able to withstand a downturn much better. I think that will certainly apply. So there's a question of, do you put your money into property? And then if you do, where do you put it? What sort of assets do you want to put it into? Having said that, I think we've seen a lot of our clients are certainly halting or pausing expansion plans, but we're already seeing assets coming onto the market for sale. So if people do want to buy assets, there are certainly going to be some available.
Yeah. Kafir, are you happy for me to keep picking questions, or you want us to change tack?
I think if we could start wrapping up, maybe just one more question and then maybe just a general send-off. I think that's we're coming towards the end of our time gap.
Okay. I've got a valuation question here, which I think is quite interesting.
Yes.
I mean, these poor guys don't know whether they're Arthur or Martha at the moment in terms of valuing land. Gerhard, what are your thoughts on that? How, when you're asked to value a property right now, do you just take a medium-term view and assume that we're back to normal? Do you try and build in the risks and uncertainties that we're faced with today? What do you do? How do you cope with that?
I think I would defer that decision to value it, because it's just impossible. On the previous point around is, after all of this, is property a good investment? I think the typical response to that is free advice is worth every cent you pay for it. But here's my advice is it is impossible to determine an investment strategy for post-COVID, before post-COVID. Any decision around property or investment, if possible, should be deferred, and that obviously impacts on valuations as well. We will get through this after a while, and then we will be in a position to plan better for the future.
Sure. Okay. Sage advice there. Does anybody else want to add to that? Okay, fine. So I think what we'll do then, Kafir, is we'll ask each panelist to give us a little synopsis, a wrap up of their thoughts, and then I'll try and close off by summarising some of the themes that have come out of this. So shall we start with you, James?
Yeah, sure. So obviously thoughts. I think I'll make it from our position as a kind of an investor and developer and holder of assets. I think it's come out very clearly throughout the whole webinar that really it's got to be an increasing conversation and mutually beneficial solutions. That's what we all have to work towards, and that's where the focus should be. I know it was a bit of a joke, but this idea that we don't want lawyers becoming rich off this pandemic. We do want it to be, yes, all the clauses are there, and yes, we can all be stubborn about them, but in reality, as we've all said, you're better off having a business to come back to than no business at all. So I think the overriding thing, I'm sorry to get this out in front of all my other panelists, is that people really have to have the conversations and look for solutions that aren't just reverting to what's included in leases.
Yeah. Okay. Thank you. I agree with everything that you're saying there, and as you said, having a business to come back to is extremely important. I mean, you can save some short-term pain by walking away from your obligations, but where does that leave you in the long term? And if you're a retailer, you'll have nowhere to go. Drew, some sage advice from you before we close?
What, you still want to hear from me? That's nice. I thought about the opportunity in this, and I love the sentiment earlier of we will come through this. Of course we will. It's some of this, the world is coming to an end stuff. We need to take a step back, pause a little bit, and I think look for the opportunities. So, as we all know, the best mall managers or the best hospitality people ask, how are you first before getting into the business thing. That empathy, if all of us showed, and we seem to have had a running theme through this thing, serves us all really well in whatever we do, whether it's with our employees or other people. And I think all the consultants, I mean, look at all of us and 386 who are still on the call, spending time in all this stuff to actually share knowledge and wisdom and all the rest of it. So I think just keeping a little bit of that sentiment will hold us in good stead in all our relationships and what we do. Thank you.
Absolutely. Fantastic.
And thanks for everybody joining this call.
Good. Gerhard, some winding up from you.
I would say, be commercial, show restraint, and make sure that you behave in a way through this crisis to ensure that after this is over, that people would still want to deal with you.
Absolutely. I agree. I think that's coming out very strongly here. Jess.
Yeah, I think maybe just linking to the last question about valuation as well. There's a reason that we have professional valuers, and that the property, like the intrinsic value of a property, is not assessed by a quantity surveyor. It's not the bricks and mortar. The value of a property is its use to people. So we know that people's behaviour is going to change, and therefore the way that we use property is going to change. How much it changes, how it changes, how long this is going to go on for, like we've all been saying, we don't know. If we did, we'd be billionaires and kings and queens of the world. So I think we just need to look at your scenarios. What's sort of best case, middle ground, worst case, and just sort of have a plan for each, and make sure that you can adapt until we get a clearer picture as to how this will actually play out.
Good. Okay, so just to wrap up then, the themes that I've taken from this is in relationships between landlords and tenants. We're talking about sharing the pain, making sure that both sides appreciate and understand that a common solution needs to be as painful for both parties, and one can't assume that the other will burden the responsibility or the financial hardship. But at the same time, one size does not fit all. And so the solutions will be horses for courses. Looking at the sectors, we've agreed that hospitality and retail will be the hardest hit, but paradoxically, the anchors within those retail spaces are actually trading their socks off at the moment. And this could also be said for medical and medical facilities and the logistics sector, which may actually be better off during this crisis than it was before, notwithstanding restrictions on movement curtailing that. Commercial and retail developers, landlords need to rethink how the tenants will use that space, even more so coming out of this crisis, even though they were having to do that already beforehand. Landlords and tenants, I'm repeating myself slightly here, need to negotiate mutually beneficial solutions. They need to have a business to come back to in terms of the tenants. And so rather than just getting the lawyers involved and quoting a clause in the lease and walking out as a result of it, even though that is in your armory, you're in a much better position to negotiate something mutually beneficial. Developers have options to discuss with their financiers. Rather than crying themselves to sleep or pulling what little hair they have left out of their heads, they can talk to their financiers, as Gerhard has said. There are options available, deferring interest payments and so on and so forth. Obviously, the financiers aren't simply going to tolerate the taps being turned off because they have their own shareholders to answer to and so on and so forth, but there are options to be discussed. Finally, investment decisions. We can't make investment decisions at the moment because we really don't know what's going to happen. So we're going to have to defer those investment decisions. And insofar as running your own business is concerned, best, medium, and worst case scenarios are the best that you can do at this stage, using the data and information that you have available to you, but being cognizant of the fact that the situation is changing very fast and you need to be able to adapt in order to overcome the changing circumstances. Kafir, I think that's me done. We're at our time. I will hand over to you to wrap up. Thank you very much to all the panelists. Thank you for all the attendees. Thank you for all the fantastic questions that you've given us. Unfortunately, we've only really managed to scratch the surface. As in the nature of these things, there are literally dozens and dozens of questions. And if we were in a room, the person with a microphone would be absolutely exhausted by now. But thank you very much for all of your questions, and apologies we couldn't get to all of them.
Yes, thank you, Ben, and thank you to all the panelists, the audience. I think that was very engaging, and I think that was very robust solutions and the state of kind of where we are. So thank you everyone for participating. Thanks once again to the panelists, and then as API we'll be continuing this platform throughout this period, starting next week with a deep dive into the African retail sector. So I know we touched on it.
We've answered all those questions already, Kafir. There's no need to do that. We've covered all of that.
So yeah, we're going to bring on one or two retailers, some developers, and more deep dive into the different retail sectors across the continent. And yeah, thank you for everyone, and we'll end on that note. Thank you.
Thanks very much. Take care, everybody. Stay safe. Bye-bye.